Happy Monday, everyone. So I just right before I was going come to class, I crossed paths with Tyler Jones, and he was saying 1:30 is the worst time to have a class, because everybody's just kind of tired and a little bit unfocused. And so, like, do you guys agree with that? Like 1:30 is, yeah, just had some lunch. You just kind of want to like have that afternoon nap, and it's really hard to focus on anything, much less auditing. Well, I've got good news. Today's lecture should be pretty short, so we got an option. Okay, could just put our heads down and like take a 20-minute power nap if we really wanted to, and then wrap up in the last 30 minutes of class. Or I could try to do it in 30 minutes and everybody could like have 20 minutes afterwards. Yeah. What do you guys think? Power through it the next 30 minutes and then get it done. Yeah. All right. Yeah. Everybody seems hopeful and optimistic. I'll try not to let you down. Before we get started, so just a little bit of guidance on where we're doing the next few weeks. Today is going to be pretty easy. This is like the one of the few chapters that's going to be fairly laid back. There's not a lot to auditing human resource management. And so we'll get this done pretty quickly. We got inventory on Wednesday, then we'll have homework on Friday. The schedule gets a little bit wonky. That's a technical term for it, moving forward. So we're going to have chapters 14 and 15 on Monday, chapter 16 next Wednesday, then homework on Friday. We are out of class on 2 weeks from today. So that's going to be the term break, I think is what the official term for it is. But when we come back from term break, that's when we actually are studying for the next exam. And then we'll have our next exam on Friday of week 14. So I didn't intentionally schedule that to follow term break. That's just the way that the holiday worked with my schedule and my normal schedule. A few things to remember. This coming Friday, your Excel assignments are due. If you have not started working on your Excel assignments yet, I would highly encourage you to start working on it now. I did have an unfortunate incident where I had some students who waited until the Thursday night before. It's like 2 years ago to wait the Thursday night before to start working their Excel assignment. My poor GTRA was talking about he was up to midnight answering questions. And so I will tell you right now, please do not wait until Thursday night. Start working on it now so that you can get advanced to the questions. If you wait till Thursday night, it's going to be a rough ride. If you wait till Friday before class, it will be impossible to finish. All right. So please make sure you start looking at that now and get that done. I do note that a few people have already submitted. So those of you who already completed it, thank you for your being proactive. I know that I tried this thing called proactive procrastination. I said, instead of waiting to get things done, I do them as quickly as I possibly can to get them out of the way. That backfired on me because then everybody just thinks that I'm just like a go-getter, which, yeah, I don't want any of that. I don't want any of that action. Week from Friday, we've got our professional interaction due as well. So please make sure you keep that in mind. I graded all the professional interactions that were submitted earlier today. They looked really good. So no complaints there. But yeah, a lot of stuff going on in the next few weeks. This is the time that the Truman students live for, right? It's that last month of the semester, So in the rally, the good news is that we don't have to rally for finals for most of you, so we don't have to worry about that. So let's go ahead and get through this. Power through the payroll process or the human resource management process. I call it human resource management because that's what the slide says. We're going to kind of use the vernacular saying this is the payroll process because as we're going to find out, the sum concern of what we as auditors are going to be concerned about is going to be payroll transactions. So human resource starts with establishment of sound policies for hiring, training, evaluating, counseling, promoting, compensating, and taking remedial actions for employees. Which I'm not going to say that human resources is irrelevant because there are a lot of concerns with respect to how our organization conducts this human resource process. We want to make sure that we hire effective employees, that they do their job properly, that they're properly trained and updated as necessary. The question is, how much of the things in that first paragraph are relevant to a financial statement audit? Some of these can be indirectly relevant. You can actually say, if we don't have proper hiring of employees, we might hire fraudsters who could actually misstate the financials. They might be indirectly relevant. But for the most part, we're not auditing the human resources management process itself. We're not auditing and saying, are you following proper hiring policies? Are you following proper promotion and counseling policies? Basically, our goal is to make sure the financial statements are free from material misstatement. So what does that boil down to? Basically, once an employer has been hired once an individual has been hired as an employee, the main transaction that affects the financial statement accounts is going to be our payroll transactions. Okay. And that's going to be the focus of the audit, which makes things very simple. So if you go into an audit, say you're starting your first year audit, your first year, and you're bright-eyed and fresh and ready to go, and your your senior associate says you're going to be auditing payroll, you should do a small fist bump. Say, yeah, because I know exactly what I'm going to be focusing on. It's payroll transactions. That's going to be my focus. Now, if you want to be a go-getter, you can start focusing on operations, and Dr. Otero would be very proud of you, but that's not our goal as auditors, okay? Our goal is to focus more on the payroll or on the financial statement side, the financial reporting aspects, whether that be controls that affect the financial statements or the financial statements themselves. So let's go ahead and break it down. Let's break it down to things that you probably already know, but we want to reiterate. Two types of transactions are typically processed through human resource management process. And when we talk about two types of transactions, these are transactions as we would think of from an accounting perspective. The first of these is pretty straightforward. Payments to employees for services rendered. So you work, salaries expenses is debited, and then salaries payable is credited. At some point, the salaries payable would be paid off. That's not really a payroll transaction. That's just meeting an obligation of a liability. So pretty much for the straightforward part, we're going to be talking about how do we generate that salaries expense, how do we record that salaries payable. The second one is related to the first one. Accrual and payment of payroll-related liabilities arising from employee services, which includes liabilities for Social Security and unemployment taxes. So has anybody ever received a paycheck before? Most of you received a paycheck, you look at that paycheck and it doesn't just have the amount of hours times your pay rate, and that equals the total. There's always all these numbers that go on there. Even that first paycheck, like my very first job that I worked was at McDonald's. Can you believe that? Yeah, McDonald's. And I did that deliberately, by the way, because I was McDonald's kids. I grew up and I said, Happy Meals are great. Quarter Pounders are great. Big Macs are great. I really wanted to work in a place that served all those things. I became disillusioned very quickly. Yeah, I got my first paycheck and I thought, this is great. I'm earning $3.35 an hour. That was minimum wage, by the way. That was minimum wage when I was working at McDonald's, $3.35 an hour. I worked 40 hours in this paycheck. I'm going to have over $100 in my paycheck. My paycheck came back and it was like under $100. So like, what the heck is going on? And I found out about these things called taxes, and my hate relationship has progressed ever since. But no, all those things that go into it, the employment taxes, the Social Security taxes. For more advanced situations, you have my benefits that are associated with that. All the liabilities that go into that, those are going to be a part of that payroll transaction as well. By the way, interesting story. I know you guys are waiting with bated breath here. Dr. Barnes, tell us more about McDonald's. I had one summer I worked at McDonald's. I had back-to-back 60-hour weeks at McDonald's, okay? And we were paid on a bi-weekly basis. Anybody want to guess how much my paycheck was for that 2-week period? Back-to-back 60-hour weeks working at McDonald's. It was $250. Yeah, $250 for a 2-week period because I was earning $3.35 an hour, and yeah, that's kind of works out when you got all the deductions based. So yeah, if you ever say I don't get paid enough, I'll just say, yeah, hold my beer. Oh, we're on campus. Sorry, hold my Red Bull. There we go. Yeah, okay. Yeah, so pretty straightforward as far as the account types we're going to be going. We're going to focus on this first one to start with. There's a lot to unpack here. We're going to talk about this one incidentally, and we'll talk about why that's incidental here in just a second. But let's go ahead and get into our transactions. Now we're doing the things that we did from chapter 10, talking about the different types of transactions, payroll transactions, and accrued liability or payroll liability transactions. So some of these are pretty straightforward. We've got our payroll liability and expense accounts, which are going to be like our salaries payables, salaries expense. Cash is going to be paid out because we have to actually pay our people. Now we have to pay our employees for the work that they do. We've got some direct and indirect labor expense accounts, but then we got inventory listed up there. Why is inventory listed as a payroll account? And when is that going to be relevant? Okay, so because when we don't have the cash to pay our employees, we just give them inventory instead. It says, I used to work at a donut place. It says, Dr. Barnes, they didn't call me Dr. Barnes back then, but Michael, we can't afford to pay you, so have some donuts. It's like, oh yeah, I love donuts. So that explains my belt line. Yeah, so that's not the one we're talking about though. It's not what we're talking about. How is inventory related to payroll? So remember back in 221 when you have people who are directly relating or directly working on the products that you're manufacturing, and you have to capitalize the cost associated with that and the cost of inventory. That would be an example of this in situations right here. If we're actually if we're talking about that something that be recognized as work in process, then it would be a cost of inventory as well. So we do have to consider the possibility of recording inventory transaction costs as well here. It is a very specific scenario, but it is still a very relevant one that we have to be aware of. And then we've got a cash into various accruals such as payroll taxes and pension costs. I promise we won't do any pensions here, though from what I've been told, old Trevor didn't teach pay or pension stuff in 303 anyway. He skipped that chapter. It's just like pensions. That's so outdated. To be fair, I think that very few companies do actually do the defined contribution or defined benefit stuff anymore. So maybe that was really smart. Did I have told you guys that I taught 303 when I first started here? Is that something that everybody knew? Story time. I said when I first started here, it says, well, okay, we want you to come in and teach us. That's great. I will teach anything other than tax or pensions. And they put me in 303 my very first year. Okay. So I got to teach both tax and pensions my first year. So it worked out really well. Yeah. And here's where I come from here. I'm vamping, guys. I'll stop wasting time. So types of documents and records that we're going to be talking about. Personnel records, obviously, we do need to actually note what the origin and the inception of the pay rate is. So we are going to be looking at the inception documents because we are going to be checking that back. We're also going to be looking at the W-4, the time card sheet, checks, the payroll register, the payroll master file, any changes that occurs to the master file, payroll reports, and then various tax reports and forms to actually refer for the payroll or liabilities we're talking about. Okay. Functional areas, the human resource process. I'm going to tell you right now, we're going to follow our same pattern. It is a lot less clean for our future process areas. Remember when in revenue and purchasing process, I said, let's follow the sequence of processes and our sequence of steps. And I said, this makes perfect sense because we're following a sequence of patterns of what we do in revenue and process purchasing. And then we did segregation of duties for each one of these. And I said, it's very, very clean to follow this step. Is a lot less clean for the rest of the process areas. And there's a reason for that. It's because most of the rest of the process areas are a subset of these process areas, okay? Payroll doesn't exist unless an organization has revenue and purchasing, because organizations don't exist without revenue and purchasing. So payroll is basically a function of other process areas, and it has some overlap in those areas. Same thing for inventory when we talk about that on Wednesday, and then finance and investing when we talk about that next week. But we're still going to do our best. We're still going to do our best. So we've got our operating departments, okay? And the operating departments, this is kind of how we would think about a procurement step, but this, instead of procuring goods or services, we're procuring new employees for our operating departments. Human resources kind of fits the mold of purchasing. Instead of saying, all right, we approve that you're going to purchase goods, or they're going to purchase these goods for you, we approve that we're going to hire individuals. So an example of that would kind of go to like Truman State, okay? We had 4 open positions in our faculty started the start of spring this year that we wanted to fill. So we sent out a request saying we need 4 people in the business and economics department, and the administration here at Truman State said, all right, we authorize you to fill those 4 positions. All right, so operating department was our business and economic department. Human resources was the administration here at Truman State, approving that process step. Once that happens, once we've hired people, they're going to be supervised within their process areas. Okay, there's going to be supervision within the operating departments, the people who are monitoring those activities. Then we have timekeeping, which is going to be processing the employee activity. This again is primarily going to be on an hourly basis, though it can be argued that salary will also include timekeeping, particularly if we're talking about lower levels. So, for example, many of you will be going into public accounting, and some of you have had internships in public accounting and got to fill out those time and expense reports. Aren't those fun? Yeah, they're not fun at all. They're not fun at all. You got to categorize your time and work that in 15 minutes increments, and note your chargeability. So you got to get used to that. So timekeeping can actually go just beyond what you're paid. It can actually be a tracking mechanism as well. But either how we look at it, we're going to primarily think about it as hourly basis for our purposes here, because that's actually going to be processed and directly be relevant to the amount that's paid. Then we're going to payroll. We'll record the payroll transactions. All right, we'll record the payroll transactions. We're going to disperse cash because we want to process payroll transactions, and they want to make sure that people get their money. And then we're going to have the general ledger and accounting, which is going to include a 3-way match. I include a 3-way match here. This is not going to be one of those areas that we generally look for a 3-way match, but it's certainly possible. We can definitely look at time cards. We can definitely look at payroll. We can look at disbursements to make sure those match. Anything that actually has a conglomeration of records can have a matching process, and that matching process will be a control that's in place in most department and most process areas. All right. So you'll notice up here, I put my picture of my car up here, the car with the words car up there. You know what that means, segregation of duties time. So let's go ahead and break this down. Again, this is not as clean as I would like it to be because it's a little bit more challenging with these process areas, but I think we can do a pretty good job. So if we're talking about operating departments, this is probably going to be a recording function where we say we need a new accounting instructor because Barnes is just losing his mind. Okay. We need a new accounting instructor. Human resources says, yes, gosh, yes, let's get rid of that guy. Let's get somebody else in his place. Okay. You guys will never get rid of me. Okay. I'm going to be here till the time you all graduate and then beyond. All right. Human resources is going to be that approval process where we actually say we're authorizing the hiring and authorizing the pay. Supervision is another approval process or authorization process. Now, keep in mind here, these are separate authorization steps, okay? This authorization step is saying the hiring authorization and approving the pay. This is the activity supervision. So this is going to be authorization of the activities that people perform. Then there's a recording function here that occurs at timekeeping. This is usually performed at an individual level. So when you go to work for a public accounting firm, you'll be recording your own time. When I go to work and go back to work at the donut place because I'm going to look for a retirement gig that's going to actually meet my fancy, maybe McDonald's, who knows? Yeah. So when I do that, I'm going to be putting my hourly punch card in, whatever it might be. It's going to be a timekeeping that's done on individual activity. There's also another recording step, payroll. Payroll is actually recording the pay step. So it's not recording the hours, but actually computing the pay and recording that. Cash disbursements, this is the only custody function that we're going to be looking at here because cash is going to be our asset. And whoever's responsible for dispersing that's going to be responsible for the custody of it. And then general ledger accounting, this is kind of be our recording function at the aggregate level. So recording the transactions within the system itself. So this is the accounting treatment right there. So again, separation is still segregation of duties here, still something that's very relevant. It's a little bit more challenging to break this down and delineate this because there is some overlap into other process areas. All right. So is there inherent risk associated with payroll? Well, yes, there is. What should the audit consider as part of the inherent risk assessment with the human resource assessment of the human resource process? Well, probably the first one is one that we've seen already, and it's going to be economic conditions, okay? So example of this might be minimum wage laws, or it might actually be the prevailing economic conditions that are surround a spot. So I was actually bringing this up to my AS class today, but everybody remember back in March 2020 when there was like a big global financial or global pandemic that occurred? So I don't think anybody in this room other than me was here on campus at the time, but there was a big change in Kirksville at the time because everybody was saying, I don't want to go work for Taco Bell or for Burger King or any of the fast food restaurants because one, it's dangerous. Two, they don't pay me enough. And three, I'm already getting disbursements from the government for the stimulus checks. So I'm actually getting some funding. So what did a lot of the restaurants have to do, you think, in response to that? They had to raise their wages pretty substantially. In fact, the Burger King on north side of town, has anybody been to that Burger King? Yeah. They have SodaStream, which is actually pretty cool. That's one reason I like it, but I don't eat there very often, but I do know they have SodaStream. They raised their wages to $15 an hour, which we're in Kirksville, Missouri. It's kind of crazy you think about that, but that's because they could not actually hire people for less than that. So it was a temporary condition. They said we're temporarily hiring at $15 an hour, whereas Taco Bell said we are not raising our wages at all, and they were having 1 hour wait times through their drive-through. So that's not relevant to this discussion. But this is kind of the idea behind economic conditions is this can actually prevailing forces beyond minimum wage laws can actually affect this, and something we need to consider. Supply of skilled workers is related to that, particularly if we're talking about an area where there's a limitation on the number of people we have to that can be actually perform those tasks. This is something my own personal career that I've experienced because there's a very limited number of accounting professors out there, which is why I've got job security. So yeah, like I said, that's why you're never getting rid of me. But yeah, and that's something that's true for just accountants in general. There's a big demand for your services out there, which is why you've got a good gig going. If you decide you want to go out and go to work here in the next few years, there's going to be a lot of demand for that because there's a limited supply pool. The rate of employee turnover, if we're talking about an industry where there's substantial turnover, specifically if we're talking about some of the lower skill occupations, or there's conditions that might incentivize people to actually go pursue new opportunities, that can certainly be a factor that plays the role in here, inherent risk. One of the ones that I bring to mind is my brother. We used to be a general manager for a place called Raising Cane's. Anybody heard of Raising Cane's before? They have delicious chicken fingers, but like any fast food place, oh, the wasp is back, isn't it? And it's been there. Say, uh-oh. Now I apologize because I did not record any of that. So, but for those of you who don't know, we watched the wasp for a few minutes. Then Reed decided he'd had enough of this and got up and killed the wasp. Now the ceiling tiles are out of place. And so actually, so hold on, I'm not even joking about that. This is going on YouTube. All right. All right. So yeah. So let's see if I can put the ceiling tiles. Yeah. Yeah. There is a dead wasp on the ground and ceiling tiles that are messed up because Reed does not mess around. All right. It's all downhill from here, guys. All right. All right. So we were talking about employee turnover, labor contracts. Okay. Labor contracts can affect whether or not people can be hired or whether people can be fired in certain situations. Organized labor for the same reason, that can actually have some sort of bargaining power. And then finally, governmental regulation. Regulations can actually cover whether or not people can actually be worked in certain areas. This one's a very interesting one simply because job requirements may prohibit people from being fired under certain conditions, even very unfair conditions. So we have to be very, very aware of that. All right. What did I say last week about reliance strategy versus substantive strategy? I said that we were going to move to substantive strategy this week. Was that what I said? No, I said reliance strategy. We're not on substantive strategy just yet. Okay. Sorry, guys. We're still on a reliance strategy. There's sufficient a number of payroll transactions that we cannot audit all of them. So we're going to, especially if we're talking about a large organization, so we need to rely on clients' controls. You know what that means? If we rely on clients' controls, that means another table. So table 12-5 of 428 provides a summary of the relevant assertions, which transaction events, the possible statements, control activities, test controls. So the control sequence, as we like to look at it, remember your focus should be understanding the association between them rather than trying to memorize the table. So we had 2 tables for each of the first 2 chapters. We'll only have 1 table for this chapter. This is table number 5. So let me give you an example of what we're going to be looking at this table. So we've got our assertion. Our assertion is going to be completeness, okay? And what would be an example of completeness for with respect to payroll? So employee work performed but not recorded. So again, completeness our recording assertion. So somebody actually works their job and we fail to record their transaction, and that would be bad business protocol for any organization to be able to follow. So how do we actually make sure that everything gets recorded in a timely manner? We use sequentially numbered time cards. So that's a sequential documentation that we've talked about a few times already. What is the purpose of using sequential documentation? Well, sequential documentation is going to be very, very useful for making sure we don't have any gaps in our presentation. So if we do see a gap, we would say, did something get overlooked? Did it get recorded, properly recorded? And the answer is no. We can follow up and figure out why something did not get recorded. So that's a control activity right there. What are we going to actually do as part of auditors or auditor work? Well, we can just verify the numerical sequence of time cards and timesheets. This is a very easy inspection of records of documents. If we know that a numeric sequence exists within a series of documents, we can actually just go look at those documents and see, all right, number 1, number 2, number 3, number 4. If there's a gap, we can determine what did the management do or what did the appropriate personnel in that area do to actually investigate that gap. So again, not only do we understand why this is actually a test of the control, but we want to make sure that all these align, that we understand why this is a concern about completeness, why the control activity addresses the particular problem, and why our test addresses that particular control. So there's a lot of these. Like I said, table 12-5 is going to be your next resource to look at. So please make sure you check that out on your own. All right. As far as we talk about with respect to detection risk, we already know that assess control risk is going to make sure is going to be our starting point. Then once we test controls, we'll have our achieve control risk. And just a reminder, what happens to detection risk if control risk is the same or higher than control risk? If it's the same, then we don't have to worry about detection risk changing. We can leave detection risk the same. But if we say control risk increases as a result of our test of controls, remember that makes detection risk go down. How do we feel about low detection risk? Low detection risk a good thing or a bad thing for auditors? It is a bad thing. We don't like low detection risk. Okay, low detection risk means we can only tolerate a small amount of risk, and that affects our substantive testing. Speaking of substantive testing, we've got a couple of different ways we can substantively test payroll. I will say that substantive analytical procedures can be somewhat helpful in this area because we can actually use them to gauge some information with respect to trends. So as before, we can talk about the nature of trend analysis and ratio analysis. These can be very useful for these particular types of accounts. So you can see right here, we've got comparison of years balance or previous current year's balance with prior year's quarterly balance. That's an example of a trend analysis. Or as a percentage of sales of prior year's industry data. So you're looking at ratios based on another valuation. We can also estimate certain accounts that are related to payroll, not necessarily directly payroll, simply because that's a little bit too complex a number for us to estimate. But for example, sales commissions would be an example that area where estimates would be really good. If we know that sales commissions are based on a percentage of sales, and we know what that percentage of sales is and what the amount of sales is, then it's a very easy estimation to actually do that calculation. So for certain items that are related to payroll, though not necessarily actually payroll, then we can actually develop a pretty good estimate model there. All right, so that's going to be our substantive analytical procedures. Let's talk now about substantive testing. So I decided to do something a little bit different. All right, I've got some audit procedures, and I want you to try to figure out what the assertions tested are. So let's talk about some substantive procedures. So substantive testing of transactions events related to payroll. Examine a sample of payroll checks for proper classification into expense accounts. What do you guys think the assertion is here? Classification. You guys are on the ball. This, I can tell you, this is already going to go really, really well. All right. Compare a sample of timesheets before and after period into the appropriate payroll report. Yeah, it sounds like a cutoff test. And so a cutoff test, remember, test cutoff. Recompute a sample of payroll checks for gross pay deductions and net pay. Yeah, so that is a recalculation, but what is the assertion? VAA, I heard somebody say? Yeah, VAA, okay. Trace a sample of timesheets to the payroll register. So let's think about this. Is this tracing being used correctly? So timesheets to the payroll register. Timesheets are a source document. The payroll set register would be what's in the system. So we're going from bottom to top. So tracing is good, bad? Yeah, okay. So if it's tracing is being used correctly, what's our assertion? Completeness, okay. Vouch a sample of payroll checks to the master employee list to verify validity. So we're starting with payroll checks and we're going down to see, hey, is this person getting paid what they say in the payroll checks? Going back down to the original recording of where they were hired at the organization for the approved pay. So we're moving from the payroll checks down to the original items. So that's a vouching test. I think we can agree. Okay. It is not necessarily a source document or going down to source document, but going down to a system document that was created originally. So it's more, what's the word I'm looking for? It's more time when something was reported, the time nature of it. Okay, but I'm rambling. Okay, vouching is correct. So if it's vouching is correct, what is our assertion here? Assisted occurrence. Yes, we're trying to make sure that we actually are paying people what they're supposed to be paid. All right. That was fun. Want to do some more for account balances? Doesn't matter if you do, because we're going to do some more for account balances. All right. Search for unrecorded liabilities. Now, hold on, wait a minute. Didn't we just do this for purchasing? Okay. So we did a search for unrecorded liabilities for purchasing. What were we doing? We were looking at outstanding amounts owed to vendors, and then we're trying to see subsequent to cash disbursement to see if those matched. If they didn't match, we thought, we're paying the vendors too much. Why are we paying so much? Could we replace vendors with employees, saying we have outstanding balances of employees, and then look at payments to employees after period end to see if those match? Is that a possibility? Yeah, and that's listed here. So search for unrecorded liabilities will also work for payroll, which is kind of nice because we already know how to do that. If that's the case, what are we testing here? What assertion did we test for search for unrecorded liabilities for purchasing? Completeness, yes. Vouch selected amounts from account schedules to accruals to supporting documents. So we've got some accrual-based liabilities that we want to actually go to the supporting documents. We want to see what are going to be the benefit policies that they're allowed to. What is each employee prescribed to according to their position? We can actually look at supporting documentation, but we say see what they were paid and go and see what are their liabilities based on what their job position is. So we're vouching, which vouching is a test of citizens occurrence. Okay. Standard accounts payable analysis schedule for accrued payroll liabilities. Foot schedules for accrued payroll liabilities and compare the amounts accrued to supporting documentation such as payroll tax returns. By the way, we have that word foot. Okay, what does foot mean in this context? Yes. Okay. Means summarizing the total. Yeah, I was about to make a joke, but you beat me to it. All right. So yeah, I was going to hold up my foot, but I guess I can still do that. All right. So now we're talking about footing. Footing, when you see foot in this context, which you will actually see that a lot in the schedules, that term is just vernacular for totaling numbers together. So we're doing mathematical computations. What does that sound like to you guys? Which assertion? VAA, yes, VAA. And the review supporting documentation that the entity is legally obligated to pay the liability. So legally obligated, that probably tells us which assertion. Rights and obligations, rights and obligations. Good, okay. So just to wrap up, The information in the previous slides focused on testing a payroll. So it's important to note that this is pretty straightforward. We're going to test the transactions. We're going to test the support for those transactions. And we're going to make sure that we understand what the controls are related to those, and then test the transactions individually as part of substantive testing and procedures. The substantive testing is not that difficult. It's pretty intuitive, and it's very easy to see where the assertions come from. This is probably some of the easiest testing that you would do as part of an auditor. The problem comes in is what happens when we actually test the payroll liabilities. The answer is nothing really different. It's exactly the same. We're going to do the exact same series of testing because all of the information, all of the evidence for that testing comes from the same source. So as an example for that, part of our testing for the payroll was actually looking back at the original hiring and looking at seeing what somebody was entitled to as far as their rate of pay. If I'm talking about benefits, if I'm talking about pension obligations, that information, that source information would also come from that same source. So we would do the exact same series of tests. In fact, they're often done jointly within the payroll system, okay? So the good news is that by learning what we have to do for payroll and learning the controls and controls testing and learning the substantive test of details, we can actually get a pretty wide array of tests, and we can cross apply those to our payroll reliabilities without any difficulty. So with that, we're done. We may have time to kill a wasp and finish payroll testing all at the same time. All right. See you all on Wednesday. It was.